The whole purpose of a stock market was to provide capital. Companies like Infosys, they've come and they've tapped capital from here. But today the innovative companies are not coming to stock market. They are coming to stock market after they reach a size. So do you think the role of stock market going forward could diminish?
I don't know, I've heard that, but I'm not really sure. I hope not. It's been a great place, and our trading systems are now the best in the world. We do T+1, we might go to T+0. It's extraordinary the amount of risk and volatility we have subdued. In 90s, when I used to walk the street of Dalal Street, you'd always fear there'd be a default coming and the markets would be closed and deliveries won't happen on time. I think that fear has been completely removed by the forward-looking regulations of the Securities and Exchange Board of India. So we're deeply grateful to that. So I think the stock exchange will remain a capitalistic outpost, and this will be our Eiffel Tower.
To really look at a very simple way of how Ramesh Damani invests, you've always said that, look, I'm not going to give you a fish to eat, I will tell you how to catch a fish. So no tips, no advice, but the framework. Share your framework with us. You always say buy something which is cheap, buy something which is long term. How does it work?
When we were young, we used to play the game of passing the pillow. And I think a lot of people who come to Dalal Street, the new ones and the younger investors and the more ones who are excitable, tend to pass the pillow. They buy something at 80, it goes to 85, they sell it and they're very happy. They go out, have a drink, celebrate, whatever. But the true winner in this game is the one who holds the pillow at the end when the music stops. And that music is not going to stop for a while. So you invest in great companies and give them a chance to grow. I've seen so many companies, Nikunj, that seem to have peaked out, then they correct maybe 30%, 35% after time, then they come back and make new highs. Good examples are companies like ITC, for example, or Lever or Reliance, which have conquered many a bull market and gone on to new highs. I think there are extraordinary amount of companies available in India with good corporate governance, good fundamentals, that will temporarily peak because of valuation go down. But the true winner making long-term wealth, and stock market is about making long-term generational wealth, will be the ones who hold on to that pillow to the end. I think, you can imagine what a financial conglomerate in America is worth and what it's worth in India, what a tech company is worth in America and worth in India. I think if you start doing those numbers, you tend to be more patient and hold. So my advice, to come back to your question, to all new investors coming, is that if you have to trade, but only trade with a portion of your money. The rest, invest in a great business and believe in that business, hold on to it. Think you're not buying a stock or a price movement, but a piece of the business, and you want to hold that business. And the true wealth is sometimes created there.
You've always said that the definition of a good business is that it should serve a purpose. It should solve a problem, it should be scalable, and it should be run by good guys. So which are some of the businesses you think are built to last business? One of the lovely books you've shared with me, Built to Last. Let's apply that in real life.
Yeah, I think clearly you want cash flow. And the way the capitalistic cycle works is that all business go bad after a period of time. You remember Eastman Kodak. The market for photography has exploded. Yet Kodak, which is the most well-recognized brand name in photography, has imploded. It's no longer even traded out there. They didn't see the change coming. So people who think of themselves very narrowly perhaps tend to get, defocused. So you don't think of yourself as being in the railroad business or the airline business, but in the transportation business. You don't think of yourself being in the movie business or the television business, but think of yourself as in the entertainment business. So you want to find businesses that have a broad application and have good cash flows to support the yield. And you buy them cheap. I think one of the big myths about this bull market that started was that a lot of people started espousing the theory that we only buy quality and we only buy quality at any price. That's a big myth out there because, everything has a price, especially the market is known to weigh a price for everything. So you obviously want to buy a great quality business, but when it's available at attractive price. So the stock market is a great discounting mechanism. It discounts everything at a price. And if you find a bargain, you can get on and step onto it. So don't make that mistake of saying I only want, to give you an example, companies as the quality of Lever and Infosys did not give returns for 10 years to investors because if you bought them at the wrong price. So buy it at the good price. So a good business at a great price held will almost certainly make you money.